French. Is this on? Great. At large, part-time at the streets, also published for Block Telegraph. With me is Mason Borda. Mason, thanks for joining us. Let's have a seat. So, one of the things we've been hearing over the last hour or so is what appears to be a movement in the cryptocurrency space, a direction towards security tokens. Mason's company, where he's CEO, is TokenSoft, so leading provider of compliant software for issuers of security tokens. Mason, again, thanks for joining us. We all appreciate you being here. All sorts of exciting things to unpack. One of the things I want to jump out and put out there immediately is your co-founder had a lengthy background in the security space, semantic, RSA. Let's talk about that first. We've heard in media a lot of security vulnerabilities, the wallets. Let's dispel some of the myths. How bad is it? How bad is the security with the tools that we have available for us to trade cryptocurrencies?
Cool. Yeah. So I think one of the things, as we're entering like the era of security tokens, I think one of the things that people are perhaps seeming to forget are that a lot of the security issues in terms of cybersecurity and hacks, they still pertain to the blockchain world in the realm of STOs. Up till November of 2017, about $37 million is reported by Ernst & Young was hacked. Or sorry, the number's 370 million was hacked and compromised. And that's a significant number, and it came from vulnerabilities in the smart contracts of the multi-sig wallets for Ethereum, or from people not adequately protecting their email servers and their emails. And a lot of these issues still exist today because nothing has really changed. It's just now there's a regulatory wrapper around ICOs. The tech is still exactly the same, and so I think that's the one big thing that we tend to emphasize is you can still get hacked. People will try to get into your emails. Literally everyone that does an ICO in California gets phone ported. Do we have any folks that have been phone ported or willing to admit they've been phone ported in the audience?
We probably can't see them with the lights, but
yeah. So it's very common, and so these are the sorts of things that we try to think through with our clients when they come to us.
Yeah, and that's a good segue to open up into the broader topic, which is compliance. Certainly, it's unpalatable to global regulators to have basically pirating going on. But within the stack and the menu of things that they can tackle, let's talk a bit about what your company does. It's you're treading into new territory, and it's largely in the security token space. Earlier you told me you had 23 clients already, and the space that we're looking at, what we're referring to, there's 6 now security tokens that are trading, and the largest is Hashgraph. Is that right?
Yeah, in terms of trading, I don't know the exact number, but I think Open Finance is the only one that's the only exchange that's regulated to trade security tokens and is live right now. Yeah, I think the number does hover around 4 and 6, but it's still a really relatively young market for security tokens. The first security token was the Blockchain Capital token sale, and they wrapped up around June of 2017. And there's a 1-year lockup on all of these, and so they were one of the first ones to land on exchanges and trade. But yeah, the market's still relatively young in terms of exchange of security tokens.
Yeah, and one thing that Christian Ferry from Blockstar is his mic working now? Great. From Blockstar referred to on an earlier panel is it's difficult. It's a question of why aren't we all just issuing security tokens? Why aren't all these companies just issuing security tokens? And that's one thing that your company helps out with is, in particular, that extremely maybe costly compliance stack that they have to adhere to make for a palatable issuance. Is that right?
Yeah, there's a lot to take into consideration when you're taking money in for a securities offering, and the thing about security token offerings and ICOs in general are that there's 2 fundamental differences about this situation, and one is you're you're crowdfunding globally, so you're taking money in from various geographies and countries, and you're doing it in exchange for a security. And so when you're taking money in, there's banking laws to consider that apply. They may vary by country. They may be different regionally. There's also securities laws that you need to sort of adhere to. And it's not enough to adhere to the securities laws in the U.S. Your counsel may also guide you to adhere to the securities laws in every country where you're taking in investors. And that's where it becomes really complex.
So one thing that this establishes, so we have the cryptocurrency market, and just like any double-edged sword, it's great that you can, at least in theory and in practice, raise from anywhere in the world. Mm-hmm. That's also a problem when there's, as you said earlier, 56 different regulatory schemes, right, that anyone raising money has to comply with. So it looks likely that a lot of the cryptocurrencies that raise money are probably not in global compliance.
Yeah, it really depends on which law firms you work with. So when we work with some of the international law firms, they usually do a global survey of securities laws, figure out what they all are. Then we're the ones that have to enforce that. And typically, the maximum number of countries that have securities laws and ones that pertain to ICOs comes in between like 50 and 60. And the number usually caps at 56 from what we've seen. But even during the sale or in general, securities laws can change in different countries. So countries may come out and ban Bitcoin, for example, or ban ICOs. And so that number can even drop during your sale, and you may have to reverse some transactions.
And before we drill deeper, and I want to do that on a few fronts, but really quickly, let's talk about how big this market really can be. I mean, the 6 current security tokens in this nascent market, Hashgraph is, I think, the biggest of those. They're really just, somewhat blockchain-related companies. You mentioned Blockchain Capital. But security tokens could securitize literally anything. One question I want to just pointedly ask you, do you believe that global just stock markets, Euronext, NYSE, Amex, well, literally all over the world, move towards a token system or token model in lieu of essentially stock certificates, debt instruments, and centralized systems?
Yeah, I think it's going to be a while before the security token infrastructure and landscape is mature to the point where it becomes a significant competitive threat. And I think that the existing establishments will need to see that mature in order to actually build in that infrastructure themselves. So if they try to put their existing services onto the blockchain right now, obviously it wouldn't really scale. It wouldn't work. So I don't think that it's going to be a threat now, but maybe in 5 to 10 years there will be infrastructure that's strong enough for them to actually adapt to this market.
Okay, and so let's step into the shoes of an issuer and just make the decision that let's say we do have a security. Are the costs lower right now as an issuer through an STO versus alternatives? For example, one company could always IPO through an initial public offering. There's other ways to raise capital from public markets, including globally. You could have multiple listings. There's ways you could certainly back end your way into a existing trading shell company, and that's something that happens. Are all of those more expensive than the STO right now?
I believe so. And so what's happening with the STO and just the general market is for the first time, it's a issuer-led sale. So there's no middleman, there's no broker-dealer. In traditional markets, you partner with a broker-dealer to do an issuance, and you end up paying about 10% of what you raised. And in this market, because it's completely issuer-led, it's completely on the issuer's terms, there's a lot of middlemen that aren't actually involved in the process. And as a result, the total out-of-pocket costs end up being a lot lower than they are when you're doing like an IPO or doing a traditional fundraise, a Reg D fundraise.
Well, let's unpack that a bit. I mean, you mentioned the middlemen, and let's look at what an issuer goes through now. There's like you said, a 5 to 10% fee typically that goes to an issuing like market maker, for example. For every 100 million, let's say, Mason, that you want to raise on public markets through traditional means, what percentage of that typically gets axed or siphoned off by middlemen?
Yeah, there's a lot of like various components involved, and there's obviously the broker-dealer, there's the transfer agent, there's the exchanges, and so the number we typically hear is between 10 to 15%, and that's nowhere near what's happening today if you structure it right. Obviously, there are folks that end up paying that much in the ICO world, but it is possible to get the cost down a lot lower than that.
Well, let's assume that the STO is what is compliant for a moment, and just weigh that relatively, and let's just assume under traditional means through, let's say we were doing an IPO and we were raising 100 million, 10 million got siphoned off. How many millions does it cost to do an STO for the same amount, for that same 100 million?
So I would say a healthy budget for getting through the entire STO process, including legal, tax, all that stuff, is about 2 to 5 million. So that's sort of the war chest we see people going into this process with.
I see. So and we'll be conservative here, 5 to 10% under traditional means like an IPO, and now that's down under the STO from 2 to 5 million as a cost for the equivalent amount of capital that gets raised. Do you think that's enough of an incentive? Certainly shaving some millions, but it's relatively uncertain, it's new. Is that enough of a cost reduction incentive to warrant a wholesale move towards STOs?
I think that there's also a big part of it is really the ongoing maintenance costs are lower. So that's one thing that people aren't really thinking about is if you're doing, so there's security tokens that are always security tokens. There's also security token sales where the token converts to utility after it's distributed. Especially for the security tokens that convert, the ongoing costs are almost nothing once you're on exchanges and trading. For the STOs, the ongoing costs I would say are very competitive to what's out there today in normal public markets. So it's still like relatively low. So maybe it's a bump
initially,
but generally the total out-of-pocket costs seem to play out pretty well.
Okay, and do you expect costs to go down as the STO issuance market scales? Certainly, with 6 issuances under STOs and however many, certainly probably tens of thousands, if not hundreds of thousands of issuances under IPOs, for example, globally, right? Or other traditional means. There's certainly no scale in the STOs so far. Do you anticipate those costs to go down from the 2 to 5 million that you quoted earlier?
Yeah, so most of these costs are legal costs. So I think as the market matures and all of these become standard practices, the cost will come down there. But right now, the legal and tax structuring ends up being a significant cost. So it's just like any new industry, as people become more familiar with the standard practices, and as people get used to the process, then the costs do go down over time.
So it sounds like, just to repeat this back to you, kind of at an efficient run rate in an IPO market, that's kind of hit an asymptote about 10 million for every 100 million. And you're already down at 2 to 5 million for STOs, and you expect that to go lower. Okay, it's still an affluent market. We'll see how that pans out. I do, in the interest of time, so we can make room for questions, I do want to talk about the outcome of that market so far. There's not a lot of data points, Mason, but we have some. Certainly Hashgraph's one to point to. One of the things you told me earlier is that it was trading at around a $6 billion valuation, roughly.
It was reported, that it was selling at a $6 billion valuation.
Yeah, and so just in your opinion, just to unpack that a bit more, what's going on there? Is that warranted for an STO, given all the uncertainty?
Yeah, so I don't know what the thinking behind that structuring was, but I think when a lot of people look to do these sales, they're looking at the greater markets and they're saying, okay, we are selling this as an Ethereum competitor. What's Ethereum trading at? What's Neo trading at? What are the comparables out there? And so there's a little bit of that mindset that's going on with people determining what valuations they want to sell under. But it's still sort of uncharted territory, and we see a lot of different methodologies, I think, for structuring valuations.
Among your clients or peer clients in this space, are there any very traditional entities that are looking to STO, for example, like a REIT, like a real estate investment trust, or something that's very kind of old industry that one could point to?
Yeah, so we're starting to see a lot more funds. So we have three of these right now. The largest one is Andra Capital. They're a late-stage venture fund that's tokenizing their LP interest. And so we're seeing more and more of these come through the door. We're also seeing traditional software companies start to look at this, but it's not the larger ones. It's generally the smaller and mid-sized ones. And so we're starting to see a little bit more maturity in the markets.
Yeah, now certainly the SCO could package, debt, for example, not just equity. Yeah. And perhaps there's other ways to other things you can tokenize, certainly. And there's been abstract but very real examples of buildings. But let's talk about the valuation of those. What do you anticipate for let's say a software company or one of these funds? Will they trade at much higher multiples than they otherwise would get under an IPO, under an equivalent IPO? Or do you have any comment on that, on the valuation side?
I think in particular with the private companies that are trading at high valuations, I think if those get onto public markets that are very liquid and accessible generally, I think that could enhance the valuations there. But it comes down to the liquidity. And yeah, anytime there is more liquidity, let's say the market matures a little bit more, there's a lot more activity on these security token exchanges, I think it could become a really popular avenue for just normal private companies to start listing.
I know we're out of time. Eric, I want to be courteous to you. Give it up for Mason Borda, TokenSoft.